Good afternoon, good morning, good evening, wherever you are in this great world we live in. My name is Jack Branch. I'm located in Covington, Louisiana, and this is the Healthy Wealth Show, helping people deal with the valleys in their health and in their wealth. And I'm excited today because one of the biggest things that you and I buy is a house or other real estate. And in the past, it might have become a challenge to deal with getting a mortgage. But today we're going to introduce you to a guy that's been around New Orleans for quite some time. It's interesting. Before I met this guy, like 4 or 5 people go, wait till you meet this guy. He's like your brother. So it's going to be interesting to see him and I together do this show. But without further ado, I want to introduce my good friend, Rick Crozier. Rick, are you there?
Jack, I'm here. Do you see me yet?
I don't. I see just a blank Skype screen. So you're going to have to turn your camera back on.
All right, let's see. How do I do that? Let's see here. Rick Crozier. I don't know how. Here we go. Camera back on.
There we go.
Yeah, there we go. Now it's better. It's a lot better.
The myth, the legend. So, look, Rick, tell us a little bit about you, man. You've been in this mortgage game for quite some time, but a lot of people, when everybody got spooked in '08 and '09, when the financial collapse happened, and I know you've had your finger on the pulse of kind of what's going on. Tell us a little bit, give the viewers here a little bit about your background and history.
Yeah, I've been mortgage lending now for 20 years. Before that, I was with Deloitte and Touche for years, and then a line of business controller at Hibernia Bank for 3 years. So I've had a chance to see the debits and credits, and I was in audit and in tax. So it helps me from a financial standpoint. But the mortgage market, we've seen it go up and down, but right now rates are really attractive. They're under 5%, so that's not slowing our home buying process at all. It's just people still want to get 200 a foot, and maybe that's just not there in certain markets. The oil and gas improving is helping us, but when we were at $85 a barrel, we had a lot of people that supported that were buying homes. So we're probably seeing days on market around 6 months, and it's normally 3. So we're a little bit slower on the real estate side, but again, we're surrounded by water, so they're not making any more land. So New Orleans is always going to be, and Jefferson Parish and North Shore is always going to be an ideal place to live.
So where did you grow up? Tell the viewers a little bit about you, your family, where you went to school, some of your stuff with your sports times, and that's good stuff.
Sure. I was born in Hattiesburg. We moved to Bayou La Batterie when I was 2. So I grew up where Forrest Gump was filmed. My dad's a fish doctor, so he's a marine biologist. And my mom, after she had all the kids, we lost a sister at a young age, which was obviously a big change in the family. She decided to go back to medical school after having the kids. So she is the first graduate of South Alabama as a woman, medical school. So both are doctors in Mobile. I loved football growing up in Bayou La Batterie. They didn't have soccer and baseball in Alabama, not at that time. So I decided to walk on at Tulane in '86. Played for Mac Brown, got a scholarship, was kind of the Rudy of Tulane, but I was a better football player, I think, than Rudy. But married a local girl, Lynn Rink, so I was very, very fortunate to marry into a very good Metairie family. And 6 kids later and a lot of mortgage debt, I'm still here and still kicking.
That's awesome, man. Well, I didn't know your story. I like the Rudy analogy, and I would say I would say you're much better than Rudy. And so what was that like, going through Tulane, playing football? What did you learn about that you could apply to the mortgage industry?
Well, I think we went through a lot of adversity when I was at Tulane. We were 1-9 my first year, and I think 2-8 the next. So it builds character when you're down. I always tell my favorite story. I was a sophomore, so I was a special teams captain. We were playing Florida State in Tallahassee, and we'd been in the Dome for 2 weeks. It was air conditioned, and we were ranked, I think, 124 in the country, and Florida State was ranked 2nd.
Oh, so we went over there. Bowden days, right?
That's right. Yeah, Deion Sanders was on that team. So we took a lead 7-0 in Tallahassee. We thought we were going to win the game. We were, giving the fans the finger. We were being typical cocky football players. And they jumped up on us 33-7 first quarter, then 55-7 at halftime. So I was on kickoff return, and I was on punt team, so I was exhausted. I was playing a lot of downs at second string at safety. So Mac Brown's the coach, and I'm talking to another guy that is playing a lot. We're exhausted. I said, what is he going to tell us? It's 55-7. And he walks out of his little office. He goes, men, even under 100. And so we ended up 77-7, but it builds character. Getting beat like that, you have to get up. I don't think, how you get knocked down, it's getting back up. So I think playing football, my brother-in-law, Jay Rink, I think you may have known Jay, was diagnosed with ALS about 10 years ago. And that kind of changed our whole dynamic as a family. We really had to, I think it humbled everybody and said, wow, he was a big-time football player at Brother Martin and at Tulane. So we lost him about 5 years ago.
But I didn't put the connection. I didn't.
Yeah.
I didn't.
Yeah.
I know my wife knows the Rink family real well there in Metairie, right around the corner. So.
Yeah. So that was a tough disease. He did really great. He never once complained. There's some great specials on him. Obviously he met Steve Gleason through that process, but he never complained about his disease. And he couldn't go to the bathroom on his own. You had to do that for him. Talk about being humbled. And it was really for the whole family. He was 6'2", 260, was a very good athlete at Brother Martin at Tulane. He was kind of the backbone of the family. When he got sick, it really was a lot of, it was hard on everybody. But he never once complained. And through that process, we met Steve. Steve came over and visited Jay at my house and ended up buying across the street. So I've been wrapped up in ALS, whether I like it or not, for the last 8 years.
What a great story of overcoming, too, with Gleason and all that around, the time of after Katrina and his big moment. So what has that been like, getting to know that guy? Because obviously I watched the special with your brother-in-law with him.
Yeah.
If you haven't, we'll put a link in here to kind of highlight that story. But what's that been like to have that relationship? He's like an icon in the city, yet a lot of people might not know his story, in other parts. But New Orleans, and he just won a Congressional Medal of Honor, didn't he? I mean,
yeah, it's pretty amazing. He's I call him a granola head. He's out of Washington, so he comes from a totally different perspective. I'm not sure if you've read any of his writings, but he's just a really smart guy. So getting to meet him was neat because he was my position. I'm actually bigger, stronger, but much slower than Steve Gleason. So I stretched him. When he first got sick, my job was to stretch. And it was kind of neat. He could still talk at that time, and I was bragging to him that I ran a 4.8 and that my position coach at Tulane was Ray Hodge, who was a good football player at LSU. And Ray Hodge was another small white guy. He ran a 4.6. So I said, Steve, he must have been a 4.5. And he says, no, I was a 4.4. And not only a 4.4, but the fastest 20 time at the combine. So he had rare explosion, if you will. Obviously, he blocked not just the punt that we all saw, but he blocked 3 others in the NFL. So he was a legitimate NFL player. And again, as much as I love football, as much as anybody, I couldn't play because I ran a 4.8, and you just can't be in the NFL run a 4.8.
Well, it's interesting. I noticed, I just saw you kind of sharing some new recruits with Tulane that looks like they're getting some good guys. One kid out of Oklahoma State, in fact, who's funny story. You don't know this, but J.J. McCleskey, when I was going to the University of Tennessee, I would be coming home late after running the bars and such at night, and J.J. would be working out, and he goes, I'm walking on Tennessee. I'd be like, dude, you ain't walking on because you're too small. You're not fast enough. But it was so awesome to watch him blossom,
Well, some of the big motivators, and I think I posted yesterday, Drew Brees was told he could never play. And talk about a chip on your shoulder that just grinded you. I had the same thing when I came to Tulane. They thought I was a swimmer or a kicker because I was only about 165 pounds at strong safety, but I gained a lot of weight. Mac Brown, they put a lot of weight on you. We didn't do squats in Alabama. We just did whatever looked good at the floor, Bama. So we would do bench press all day long. But when I got to Tulane, we had to do squats and cleans. But I put on a lot of weight, and just having that exposure was good for me.
So tell us what's changed really in the mortgage industry. I know there was some, back maybe 5 to 7 years ago, everything went from this no doc loans to, hey, if you could fog a mirror, you could get a loan. And in fact, the former Fed chairman Bernanke, there was an article in the Wall Street Journal that talked about he wasn't able to get a mortgage because they used income-based testing. So I know you're with First Bank and Trust, and what made you align or partner with those guys and some of the shakers and movers that they are from a standpoint of very much at the top to all the way down to the bottom. What made you align with them, and what do you see kind of going on that's changing to give people hope?
Well, that's 2 questions really. I guess if you look at the mortgage meltdown in 2007. I've always done about 30 million a year in production, which puts me fairly high in the state, good average. Well, back in 2002 and 3, Clinton wanted homeownership to go from 64 to 67%. Well, that's 3% of 300 million. It's 9 million people that probably should stay renting. But he said, you know what? Let's loosen the restrictions on income. Let's just let them state their income. Sounded good. You know, we checked credit. We had cash down. So it sounded fairly harmless. But what happened is you get that product. Pay option arm was rolled out of Wall Street, which created kind of a variable rate mortgage, had a very high payout to the brokers such as me and to the banks. So obviously we sold that product as a lending officer. So you had that product which allowed you to negatively amortize your principal. So you get 4 options each month. You'd get 15-year, 30-year interest only, and pay option, which was about half of interest. So what option does anybody take when they get their invoice each month? So you had a lot of people doing that product and paying $500 a month, and the difference was accreting to the back end. So at the end of that was a 5-year period. Let's say you accreted 40 grand. Well, they recast that principal plus that accretion over a 20-year AM. And what happened is you had people in California buying a home for $600 when they made maybe $80,000, and that note went from $2,000 to $4,000 in a month. And so the house of cards kind of happened after that product rolled out. And then you saw this credit crunch. So we basically were going average. Somebody had a big party, and now we had a bad hangover, which is where we're still in the hangover stage now. We're still kind of beating up our really good clients. The more real estate or the more property or the more businesses, kind of the more successful you are, the more questions I'm going to have, and I've got to document it. We try to say, hey, don't shoot the messenger. But again, my volume went from 30 million to 108 million during the boom. So we were doing probably 3 times the normal volume. And it wasn't my fault. I was given the product. Somebody said, hey, state your income. We qualified you. So if you ever saw the movie The Big Short, I did not lend to strippers, but I did lend to a lot of self-employed borrowers. So if you kind of watch that Big Short, that's what happened. The product got so aggressive, and there was no limit. You could do more than 10 units. So pigs get fat. Hogs get slaughtered. I think we got slaughtered 07, 08, and we're now back to logical lending. I think why I'm at First Bank and Trust. It's local. They've got a portfolio product, Jack, which means we're only closing about 30% of our leads. In the good old days, we were doing 80. You should be at 50. So that 20% is maybe a dent and scratch mortgage. We couldn't get it to Fannie Mae or to a jumbo investor, but it makes sense, the loan. So we portfolio that like a car loan. That was the first reason. The second reason was we got a great construction perm, which is a one-time closed construction loan. So if you've got a lot on the North Shore and you don't owe anything on it, we can give you a construction loan closed today on both loans, lock in the rate today. So it's a big advantage to the borrower. And the third is my boss moved over there, and I need to have somebody protect me on the back end.
Yeah, and you know, obviously Canizero is not a dumb business guy by any stretch of the imagination. I mean, some people may say whatever they may, but he's a very good. And who's the old man that's been around there? Mr. Jimmy, right?
You know, I don't know Mr. Jimmy. The young guy that's the CEO, Gary Blossman, I've known for 30 years. Gary did a great job with Parish National Bank. I believe his brother still owns or owned Abita Springs.
Yeah.
He's just a good debits and credits guy. I think he's an LSU grad. I'm not going to hold that against him. But he is a super guy. He's run the bank for the last 5 years. He's been in charge. And the mortgage department's fairly small. There's like 3 loan officers now, maybe 4, 1 in Destin. But we've got 10 branches. So one of the reasons I kind of bounce around is I get to kind of spread myself between the Metairie, the old Metairie, and 909 Poitras downtown is a great location. So if you're downtown and you need to reach me, I mean, I can meet you downtown, that office. I can meet you in Old Metairie. We've got an office on the North Shore as well.
Awesome. So what's something no one knows about Rick Crozier?
Let's see. Nobody knows that I'm a magician. Really? I can do magic. So Rick's tricks me. Get something. Give me a paper towel. Yeah.
I can
give these away.
A trick too, but it isn't probably worthy for this show.
I'm going to show you one in a second. So this is Team Gleason. So we give these away. We take care of Steve whenever he needs us. I'm going to do my magic trick real quick. You'll be able to see it. Okay, here we go. Christopher, my beautiful assistant, is working behind me. All right, we got this, right? Now, if I grab this, I'm going to do it again, but I'm going to do it this way. I'm going to do it this way. Now, blow soft. gone. So that I do a little bit of magic on the side. That's the one thing probably nobody knows other than my friends back in Mobile.
So what made you start doing that? Just being kind of the life of the party, kind of cutting up?
Well, I was living in Bala Battery. If you ever been down in Bala Battery, there's not a whole lot to do. You can shrimp, you can hunt. We didn't shrimp. My dad was a fish doctor. He didn't want to be around fish, right? So we couldn't shrimp. He didn't believe in killing anything, so I couldn't have a gun. So basically, I'd read magic books and sit around. And I worked in San Diego, the magic shop, when I was 12. I have a lot of family in San Diego, so I go back in the summer. And I used to work in their magic shop when I was young. So it was fun. It helped me learn how to read. If you ever had to learn a magic trick, it's not easy.
That's true. That's true. So what else? I mean, so a guy that's self-employed that might have had a bad year out of 3, how does he or she end up still getting good with refinancing and such like that in a way that he's still going to be able to pull this thing off in this day and age? Are they still doing
Yeah.
the worst out of 3 years?
No, well, yeah, the underwriter's always going to go off the lower purchase price or appraisal, whichever's lower. So the underwriter's conservative. They're going to average your tax returns unless they're falling, right? And they're going to take the falling year. But what we do have, and it's interesting, we've got a few investors, about 3 or 4, that have come back out and said, hey, if the guy's got a 660 credit score and he can put down 10 or 10%, we'll go off the deposits in his bank statement. So it's called a bank statement program. We had it before. That was actually more conservative in the stated income. We had to at least verify the deposit. So we have a 24-month bank statement program. So if you're depositing $8,000 a month into your account, we'll give you, if it's a business account, we'll give you 75% of it. So he doesn't have to fully dock everything with the IRS. We do have a bank statement program, but the rate's going to follow the risk. So our conventional rate now, if you're a doctor, lawyer, Indian chief, 700 credit score, 20% down, we're probably around 4.7. We started the year at 5.1. So rates have trimmed down. A lot of that's because of the equity markets, and there's just not a lot of inflation. But secondly, so that basically what we can do is take his bank statements and give him credit. As long as he's got 24 months, he can use that as income. But the rate's not going to be 4.7. It's probably going to be 6.5.
And so what makes you so much different than any other lender out there? I mean, I know you had mentioned to me you guys do a holistic approach. Talk to the audience a little bit more about what that holistic looks like. Cause I kind of have the same approach to finances. I find a lot of my CPAs that I deal with or my clients deal with, are more reactive versus proactive. So, anytime I ask a business owner, hey, how well is your CPA? Many of them are like, not too good. He's a historian. So I'm trying to help a few of them become more proactive versus reactive. So apply that to the mortgage business and the deal you're in to kind of talk about what that holisticness looks like in the mortgage game.
Well, I think you want to be local, whether you're using an advisor, a real estate agent, a mortgage banker, an appraiser. It's just good to be local. The rates are the same. You're going to see these people in and out. You're going to need to go back to them. So I like using local vendors, first of all. Secondly, I think if you look in New Orleans, south of I-12, the principal and interest usually makes up about 80% of any note around the country. You've got a little bit of insurance, got a little bit of tax, you got no flood, and then some mortgage insurance. In Orleans, anything south of I-12, principal and interest makes up about 65% of your note. Well, what's the other 35? Well, you got homeowners. Homeowners can be $1,800 a month if you got a good guy, or it could be $4,800 a month because State Farm doesn't write. So we spend a lot of time shopping the homeowners, helping them get good advice because their homeowners premiums can be all over. If you're in a flood zone, well, that could be $300 a year. It could be $3,000 a year. So there's a lot that goes into that note when you're south of I-12 that wouldn't happen anywhere else in the country. So we spend a lot of time. And in the rate, if you borrow $200,000 from me at today's rate at 5%, that's going to be about $920 a month. If you go to Quicken and they're going to quote you 475, they're going to do it through the computer. They're going to pick an appraiser that may not know the area. They're going to be 475. That's only about $18 a month. We may save you $300 a month in insurance and taxes by basically working through that process. So we really, by the time our clients finish with us, rate is not really the issue. What's my note going to be? Do I have a homestead exemption? Can we do anything with the real estate tax bill? Are we buying any movables? A lot of my clients are buying $900,000 homes, but in that is some light fixtures and some, let's see here. How do I get back to that? Hold on one second. I lost you.
I see you.
I don't see you. Okay. So.
Wait, you froze.
So what? Yeah, I'm back. You there?
No.
Oh, there you go. Hold on. There we go.
I see you froze. You got your mouth open.
Let's see here. I should be popping in there anytime soon. You see me?
You're froze. Let's see.
Am I still frozen?
Yeah.
Huh. Let me see here. I don't know why. Let me see here. Let's see.
Well, look, you've given some great information. So how do they get a hold of you at First Bank and Trust? You got a real easy number, right?
Oh, what's that?
What's the number that they can get a hold of you to get some more information, get you their documentation, so forth and so on, to really see what they...
Yeah. 504.
Oh, there you came back. Good.
Yeah, so I forgot what the last question was. What was your question before we got messed up?
The question was, we were talking about holistic, and so often I think people get worried about when people come to me and they go, well, why, Jack, would I refinance from 4.25 to 4.75? I'm like, well, if you got all this non-deductible, bad debt that's, ripping you off at 15 to 20%. I even had one guy just show me, a business guy, that these lenders came in and they're lending on his deposits at the tune of 50 to 100%.
Yeah.
How can they get away with that? I mean,
that's not anybody, because we're now heavily regulated as mortgage bankers. We've got RESPA regulations. We've got the bank watching us. We've all got to have the same rate. So when you go in to get a mortgage today, believe me, instead of 3 docs, you sign about 100. Yeah. Buyer beware. No, not in us. We're going to give you 3, 4, 7, 8 outs. If we're off by $100, you can shut the closing down. If the APR is off by 0.10018, you can shut the closing down. So there's all kind of controls for borrowers. But I think the main thing they want to do is, when you look at your mortgage, a lot of people are like, oh, I need it to be 2%. That's the old rule of thumb. When mortgages were 60 grand, 2% would save you about $1,200 the first year, 0 the last. So $600 a year. Well, if your closing costs are $3,000, that's a 5-year payback. That's kind of long. Right. But today's average mortgage is about $300. So if we're at 5.375 and you're at 6, you're saving 0.62. You're saving about $1,900 that first year. So you get the closing back in 2 years, because closing costs are dropping and average loans have tripled since that rule came out. Yeah. So I do think you need to look at that. When you go to buy a home, ask for what's my closing cost and what's my rate? You're allowed to ask for the APR. I mean, that goes into the calculation. So make sure you compare APR when you're quoting, but get several quotes. I mean, make sure, and you can put your banks against each other. So what'll happen? Every now and then Costco will come into our market and they'll throw out a rate of 3.8 instead of 4.25. Costco does stuff for $100. So I said, look, if you're going to be paying your mortgage banker $100, you can go that route if you want. But be careful of the service, the closing. Make sure he gets your homeowner's flood. Make sure he checks by the time I go through my checklist, they're like, you know what, Rick? If you can get me down to 4, I'll do business. And then we just match the rate. So when you're talking to a banker, you can use the old negotiating skills you've known since you were 8. I mean, everything's negotiable. And you need to be able to walk away from the deal. And that bank's going to ask you, hey, can you send me that quote? So I need to get a matching quote, and we usually match it. But the business it's definitely, the borrowers are protected in a lot of ways. But I do think, whether you're building a home, the decision to pick a builder is a lot more tough than for a banker, because you make a lot of decisions. Your real estate agent, I recommend staying with a professional real estate agent. That's at least 20 transactions a year. One of the problems with the real estate industry is we've got 6,800 real estate agents in the greater New Orleans market.
Wow.
And we have 11,000 sales. So your average realtor does about 1.8 deals a year and makes 13 grand. There's nothing wrong with that. However, I recommend, you've heard of the 80-20 rule.
Yep.
Well, with our real estate agents now, it's really like 95-5. So about 300 agents do all the business in the city. So I recommend Googling, going to Yelp. How many reviews do they have? Are they getting good reviews? Buyer agents. That industry is changing a ton. I think you're seeing the Charles Schwab effect creep its way into real estate. There's just a lot of people. When you've got that many agents, there's just a lot of opportunities for somebody. I'm always praying that Amazon doesn't get into mortgage banking. Just like I hope they don't get into real estate. But I think you're going to see the real estate industry change quite a bit. In New Orleans, you want to stay with local people, because we know, termites. What do I do about termites? Do I need a certificate? What's the damage look like? Termites, I've had them before in my house. Those little things can do a lot of damage.
Oh, yeah.
So there's just a lot of, and I'll share it with the viewers, but there's top 10 reasons to use a local mortgage banker, and that's one of them. Termites, home inspections, plumbing, plumbing from the street, structure, real estate. I mean, in terms of, we've got great home inspectors. We got to kick the tires on the house.
Yeah, that's good. And, I always ask people, especially people that are going to pay cash, how much do you think paying cash costs you to finance it? And people go, well, it doesn't cost me anything. I said, so help me understand this. I had a client that bought a house in St. Gabriel, $2 million house, wanted to pay cash for it. And I said, I think it's a bad idea. I'd take $1 million loan, even put $1 million in T-bills, if you will, just to have the liquidity. He goes, no way. Well, then he went through some life changes, right, where he got sued, went through a divorce, and he went to every bank in town, and no one would touch him. He had great, assets and so forth and so on, but he had this cloudy factor going on, and the banks didn't know how to loan. So,
well, I think, again, I've been through divorce. So when I went and bought my house after we got separated, I'm thinking, oh, I've got a good job. No, I got 6 kids. That number hadn't been calculated yet. So a big unknown to my lender. So I had to go to a private lender. So we've talked a little bit about that. I've got a few private lenders on my shelf, if you will, and I've got a few hard money lenders. We try to stay away from that.
Yeah.
Because the rates private lenders are 7, the hard money lenders are 12. But look, if you've got, like in my case, Lakeview was $2,500 to rent. I found a double for $300. I put down $60,000. I went to my private lenders. They lent out at 7%. It was $1,660 a month. My rent way lower than rent, and I own the home. So, if there's a will, there's a way, and there's more risk associated with that kind of transaction. So I wasn't worried about the rate, and so it was kind of a win. It was kind of a win-win. But I think you want to stay local, and if there's a will, there's a way. Now, if you don't have a job and you don't have any down payment and you got bad credit, you've got a lot of work to do before you bother a real estate agent and a mortgage banker.
Now, y'all do y'all do home equity lines and other.
Absolutely.
Good.
Absolutely.
Because I always encourage people, if you have a paid off house, definitely have a line against it. Not that you can deduct the interest any longer, because they're really scrutinizing all that with the tax changes on equity line interest, but just having the access. And what's fascinating is, we think, again, the key word is think, that the equity is ours, when in fact the only time it really is ours is if we sell the house. And the example I use is, you can't take a garage door and bring it down to Rick and Canizero et al. And say, look, loan me, this money with this, garage door. It requires you being approved, being looked at. So do what you can to put yourself with a good lender. And I know Rick is a shaker and mover in the community. He's not only a big personality, but I know he's got a big heart as it relates to, just serving, fellow man. And, he's a good New Orleans boy via Alabama. So, definitely look him up. And as you start to go into this new year and start looking at some maybe old bad debt, and, maybe if you want to change the mortgage structure, reach out to him. And again, that number is
504-339-LOAN, 504-339-5626. It's down right now, but we're getting it fixed today.
And so what's one last thing you want to leave people with?
Keep it under 100. Keep it under 100.
Keep it under 100. And
life's not that hard. You're going to be okay. Keep it under 100.
That's a great lesson from his Tulane days. And, here in New Orleans right now, it's all about the Hoodats. And for all you Philadelphia fans, we're sorry. Not really. But it's a great time to be a New Orleanian, and everybody's getting jobbed up for this weekend. Thanks, Rick, for your time.
Thanks, Jack.
And appreciate you. And for those of you, again, that thank you for watching, share this video and reach out to Rick.
Hey, don't forget we got to feed the kids, Jacko. Don't forget the kids.
Let me show that. There you go. He's got 6 of them, beautiful kids all across the spectrum, and he is an unbelievable dad. And not just a good business person, but a great dad. So definitely reach out to Rick. He's your guy. North Shore, South Shore. Sounds like the Gulf Coast if you're wanting to buy an investment property. And again, tune in on Thursday when we're going to have who's called Mr. Anonymous, a CPA that can't come out of hiding because he's under a non-compete clause with his former employer. And we'll get some tax tips from there.
Love it.
You guys have an awesome day. Thanks again,
Thanks,
Rick.
Jack.
All right.
Have a good one.
You too. Bye-bye.